Hey, my name's James Nicholson and welcome to this week's property news. Another busy week, lots going on, and this is going to give you an idea on where we're expecting house prices to go. What's going on with the Trump tariffs? Are they going to impact UK business? We're going to talk about that as well. Where are mortgage rates likely to go? We've got the Bank of England next week that's having their meeting. Are they likely to cut in face of the fact that the UK economy is going down the pan at the moment? And much, much more. So if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 39,000 subscribers now. Let's get to 40,000 subscribers as quickly as we can. And let's get some more views on this video so people know what's going on. How can we do that? Firstly, smash like, tickle like, do something to that like button. That helps with the YouTube algorithm. And then share this video, WhatsApp it, Facebook, or email it to a friend or family member that needs to know what's going on in the property market. So, lots going on, as always. It's busy, and we've got a really busy week coming up next week as well. So next week we've got inflation data, we've got the Bank of England data, we've got the Fed meeting. You're probably going to see some banks either increase or decrease rates depending on what these interest rates meetings are. And around the world, central banks have been cutting rates. Canada has cut rates. The EU has cut rates as well. But what we're looking at is probably that the Bank of England aren't going to cut rates in March. It's not looking very positive. So we've got inflation data that will come out fairly soon as well. Inflation is looking like it could be sticky again. It's not looking like it's going to drop particularly quickly. Remember, we've had energy increases, or we're just about to have energy increases on our bills. That isn't going to help at all. We've also got the budget from the autumn that's starting to kick in now. So in April, you're going to see the minimum wage go up. You're going to see the national insurance contributions, the amount that the employer pays on top of what the employee pays. That's going up as well. Business rates are going up. Energy is going up for businesses as well. And in the last data that just came out, the economy has contracted slightly. So it's a mess. And the budget that we've got coming up isn't looking great either. It's looking like they're going to cut spending and increase your taxes. These aren't things that really help growth. So we've got to keep an eye on what happens there, because this stuff will impact house prices. So first off, the Bank of England meeting next week. Do we expect a rate cut? No, I don't think there's a rate cut either. The odds of it right now are less than 10%. It just doesn't look likely. And if the Bank of England were expecting to cut, you can hear them in the interviews and speeches that they do all the time. The various members, they would imply or hint towards. They wouldn't say directly, we're going to cut rates then, but they would be talking in that direction. And they're not. They're not talking about that at the moment. And so interest rates with the Bank of England are likely to stick in March. So that's not good if you're on a tracker rate. Next, Trump. Now, I've got to be careful when we talk about Trump, and I would respectfully ask you to be respectful in the comments. I know a lot of people are very opinionated on Donald Trump. Either you love him or you hate him. Wherever you sit, I don't think you can argue that this tariff stuff is really causing volatility in the markets. The American stock markets are around 10% down this month. You've got big companies like Tesla that are down more than 40%, and it is looking bad. And the problem is the uncertainty, because in the morning, Donald Trump will add a tariff to somebody, then by the afternoon, it gets taken off. And that means businesses can't operate properly. They can't forecast what they want to order. It's very, very complex. And that's starting to come into the EU now. So steel has got tariffs on it. I think iron or metals, various different metals have got tariffs on them. That's going to impact British businesses. Maybe they get lower orders because of that, and then that feeds into lower employment in those areas. These things will hit house prices. And so what we want to happen with the tariffs is if Donald Trump wants to put tariffs on the EU, get on with it, do the tariff, but stick to what you do. If you want to put 200% tariff on champagne, which they're looking to do, then do it. Stop talking about it, put it on and leave it on, and so people can get on with their business then, and business can get back to forecasting, buying, doing what they want to do. It's the up and down, left, right, up, down, all this stuff is just topsy-turvy, and it is going to cause a slowdown in the global economy. So that's one thing that we've got to consider here. House prices, how we do on house prices. What data do we have this week? We had the Halifax data. And so Halifax data indicated a small drop in house prices. And it was the February data, and it was down 0.1%. That wasn't what we were expecting. We were expecting house prices to be slightly up. About 0.3% was what the market was expecting to happen. And that's based on the fact that the market is busy. There's lots of transactions happening at the moment, but it is slowing down because the stamp duty increase is very, very close now. We've got the 1st of April when that actually happens. So people are battling to get these transactions complete by that date. That's very, very important that that happens. And so there is a lot of transactions happening. That means you can't negotiate so much if you want to buy somewhere. You just got to take that deal and go and get it done. But what we do know is that the market behind that, the deals that are following along behind, there is less of them. And so new inquiries are down with solicitors, down with agents, and you will start to see a slowdown in the market once we get through. So Halifax said the data is 0.1% down. They do expect still the whole of the first quarter, January, February, March, to be fairly strong and up. So they are expecting the next batch of data for house prices to have increased. I think that's fairly normal. And then who knows? You'll see, I think, a slowdown in the market during April and May and June. Now, what will then happen? Well, I believe that what will happen is that the mortgage lenders will cut their margins in order to lower rates to stimulate the market. They did that last year because we had a very slow start to 2024. When we got to the summer, prior to the Bank of England cutting rates, the mortgage lenders did that themselves. Some was due to the swap rate dropping. Some was due to them cutting margins in order to just get more business. And that could get the market going a little bit. I don't think you're going to see any crazy increase in house prices this year or even decline. If the market is going down, it will be a slow process. You're not going to get house prices dropping 10% in a month. It will be a gradual process that you'll see happening over time. So keep an eye on what happens with that. This is interesting. Brokers. We did a video on what brokers are expecting. And a lot of brokers feel that the Bank of England is actually going to put rates up next year. So that's interesting. And that's changed because of the tariffs, because of inflation coming back, because of uncertainty at the moment. These tariffs could massively increase cost of goods. In England, in UK, in Britain, we import a lot of stuff, and some of that will come from America. If we put tariffs on stuff that's imported from America, then that's going to get more expensive to you as the consumer. And so that's something we've got to keep an eye on. But brokers feel because of the uncertainty, because of strong inflation potentially early next year, they believe that the Bank of England will be increasing rates. That means if you've got a tracker rate or a mortgage from a bank, potentially that could get more expensive. Who knows? My opinion is the opposite. I think the economy isn't looking very strong. I think unemployment's going to rise as the minimum wage goes up. In businesses, have already cut staff and are cutting staff. Unemployment is rising at the moment. And if the economy goes into a recession or is doing very badly, the Bank of England will cut rates quite quickly then. That's what I think will happen. Who knows? Is the brokers right or am I right? Let me know in the comments below. Do you think that the Bank of England by 2026 is likely to have a higher rate than today? That's at 4.5. Or do you think it's going to be lower? I'm saying lower. Brokers are saying higher. Comment below with your thoughts and opinions. Do comment on all the videos, even if it's just to say hi. Do smash that like button. Do subscribe and check out all the other content on my channel as well, including this video right here.